Hey everybody, this is Jim at SP500chart.com. It is Sunday afternoon, a little bit before 3 o'clock, July 20th, 2014. We're going to take a look at the S&P 500 chart for the week that ended on the 18th. See if we can make some sense out of this. I think it's kind of an interesting week. Before we take a look, however, I need to remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. And I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Okay, let's start with the kind of the weekly review, and to do that I'm going to keep it on a 30-minute chart, but I'm going to zoom in just a little bit. Basically, we came into the week having formed what we identified over the last weekend video as a potential bull flag between this light turquoise colored line and this light turquoise line. The question being, would we get another jump up out of this flag similar to what we saw back in the last week or latter part of June? And we came into the week with just that little bump up above this this resistance line right here. And on Monday, we actually gapped up nicely. Started to sell back down on Tuesday, came back up, set a new high for the week on Wednesday, but then Thursday the markets really got spooked. Maybe it was the Malaysian jetliner, maybe it's what's going on in Israel with in the Gaza Strip and all that stuff. Whatever it is, whatever it was, we really saw a pretty sizable downturn on Thursday. And I made mention of the fact, I think to begin with, this little pattern right here seems to have worked pretty well. It did get confirmed as a bull flag. The chart worked pretty good. I mentioned even before we had that downturn on Thursday that this is an important technical line as I see it right now, and it still is, because this line, if you look at this rally, and then this rally, this line right here defines what is a pretty clear neckline of a potential head and shoulders top. Keep in mind, whether it's an inverted head and shoulders bottom, inverted head and shoulders continuation pattern, or head and shoulders top, they're not confirmed until the neckline gets taken out. And on Friday, instead of this neckline getting violated to the downside, we got a good bounce out of it. However, we have a trend line right here and a trend line right here that really seem, this orange one in particular seems to have seems to have put the brakes on that move up. Now, sometimes I think we have seen this before, where a world event will put the markets into a temporary downturn that once the facts are known surrounding whatever spooked the markets are able to digest that news and then continue on. In other words, it's almost as if, okay, this is going to seem like a silly analogy, but I'm going to do it anyway. Let's say you come home late at night sometime, and you think you're coming home to an empty house. Your wife, spouse, boyfriend, girlfriend, whatever, friend, roommate, you think they're not going to be in the house. And instead, they're going to scare you. So they hide somewhere. You think you're in an empty house. They pop out, and you get scared, and there's a reaction where your adrenaline is pumping, and you get frightened. But then, once you understand what happened, then things are back to normal, and you go about your activities as if this thing never happened. I'm not saying that a Malaysian jet being shot down is the same thing as a practical joke. Don't get me wrong. But what I'm saying is when it first happens, there's an initial shock. That happened during the day on Thursday. Once that shock was absorbed, and once the market began to make sense out of it, we had a nice rally. And sometimes you find that mark in the chart where things broke becomes just a one-time event. I'm not saying that is going to happen, but I will say I have seen it happen. So, as we look at the chart now, as far as the week went, it was a fairly predictable week. We identified some trend lines. We identified this neckline. That neckline did provide support. Additionally, we had this little light green line that we've talked about on a number of videos that also provided support. So it's looking to me like the tenor of the markets this week will be determined by either the ability or the lack of ability for a new high to be put in. With that in mind, oh, by the way, you could also back out of this and even say that this was something of a bear flag right here. Now, here's what I'm going to do. I'm going to get rid of these lines in just a second. There. They are now gone. What I'm going to do instead is I'm going to put just a couple of little short-term trend lines on this chart. There's my trend line tool. And what I'm going to do is we're going to back up over here, and we're going to draw that line right there. And I'm going to, I don't want to say I'm going to stick my neck out, but I'm going to make that purple. You know why? Because this could be, we could be seeing an inverted head and shoulders pattern develop here. We've seen a bunch of them. This might be another one. We could also draw a line right here. And we could say that this is a small inverted head and shoulders, left shoulder, head, right shoulder. And if that is the case, and if this acts like one, then we can measure what our target would be. And that would put us up around 1994. That would fully satisfy our larger inverted head and shoulders pattern that we've been talking about for quite a while. If the chart will cooperate and come to me here, there is the larger inverted head and shoulders pattern that we've looked at. It's not a perfectly formed pattern, to be frank, but I think it's going to work as well as one that's maybe a little bit more textbook in its form. And you can see that we have a target from this pattern of about 1990. And if we get this other pattern working for us, then certainly 1994 would fit the bill. So I think going forward into this week, I believe the line that I really want to keep an eye on is this right here. If we can get up over this line that's currently highlighted, then it just looks to my eye like 1990. I say this and I may live to regret it because we're not over this line yet. But if we get over this line, 1990 looks to be like a piece of cake. Even though we are butting our heads up against resistance in the form of this orange line right here, this just doesn't look, this looks like a setup. This looks like a setup to go to power on up higher. So guys, again, watch this line. That would be the signal that yes, we got more out of this market to go upwards. We're going to set a new high this week if we get over this line. But at the same time, I do not want to lose sight of this neckline right here, because if we cannot get up over this and set a new high, then breaking down through this line right here should be sending us back into the 1920s. So this is kind of a wait see, if you will. We got to see what's going to get served up to us. And I believe this will be the trigger line for the bull case, and this would be the trigger line for the bearish case. So guys, there's your video for trading that took place on Friday, July 18th, as well as the weekly review for the week ending the 18th. Thank you so much for taking time out of your day and weekend to watch this. Thank you for your very kind support. And if you're not a member of SP500chart.com, I've been doing this now on my YouTube channel for almost 4 years now. I started this when the S&P was in the high 1100s, and bears were everywhere saying that we're going to go down and we're going to take out 666. There was all kinds of bearish talk. I did this video because I really just felt that people were being led astray. There were too many positive signs in the market technically back in 2010, 2011, and I had to point these things out. So if you want to take advantage of learning how to spot these trends, these patterns in the chart, go to SP500chart.com, check it out. It's not expensive, and I think you'll get a lot out of it. As always, use your own intelligence, use your own methods, use your own due diligence. But if you want some ideas about some of these old school techniques of how to read a chart, and I'm talking about, we're not doing computer algos here. We're not doing automated moving average based indicators. We're doing intelligent human analysis of the stock chart that goes far beyond what these moving average type indicators can accomplish. So consider it. SP500chart.com. Thanks for watching. Have a great week.